Hello, everyone, and thank you for taking the time to review the real estate market analysis for Morgan Hill, California for July of 2009. My name is Robert Whitelaw, and I'm a licensed real estate broker in the state of California. I'm also a member of the National Association of Realtors and a certified ePro. And I'm also the president and CEO of Whitelaw & Sons Real Estate Services, sponsoring this presentation. Now, if you'd like to get in touch with me, there's a variety of ways. If you'd like to visit my website, you can find links to all of my articles on real estate. You'll also find my weekly podcast published there, and you'll also find a convenient viewer for viewing all of my market analysis videos embedded at the bottom of the front page, and that is at www.soldbyrobert.com. If you'd like to get in contact with me via email, please feel free to do so via robert@soldbyrobert.com. If you'd like to give me a call directly, just dial 408-852-0525. And finally, if you want to get in contact with me using any of the online messaging software, you can use AOL Instant Messenger, Google Talk, or Yahoo IM with the screen name The Rebel Broker. And if you're a Skype user, use the screen name Rebel Broker. Now, referrals are always appreciated. Or if you or anyone you know is interested in buying, selling, or investing in real estate in Silicon Valley, please feel free to give me a call. And of course, if you are interested in buying real estate anywhere in the United States, I can help you get through the process of finding the right agent for you. Just give me a call. Let me know what your interests are, what kind of real estate you're trying to purchase, and what your needs are. And I will be happy to find the right agent for you in the area where you're looking. Now let's go ahead and jump in and take a look at the numbers for July of 2009. And as we always do, we'll start with those supply and demand numbers. And the first ones we'll look at will be inventory numbers. More good news for Morgan Hill on inventory numbers. We're continuing to, and this is going to be true for just about everything, at least as far as supply and demand numbers are concerned. Our our inventory numbers are down. In fact, they're down a whopping 37.42%. That is a lot fewer homes on the market than the same time last year. You can see from 2005 to 2006, we made a pretty dramatic jump, and then that ratio, the increase per year, sort of eased off between 2005 and 2006 for July. Now, remember, this is just the month of July, going back year to year, so we don't have to worry about making any adjustments in our head for seasonal influences or anything like that. This is just the month of July, going all the way back to 1999. Now, that gave us 122 fewer homes in inventory this year than last year. And again, that's great news. That's really helping to sort of bring a little bit more stability to the market. That gave us a grand total of 204 homes currently on the market. Now, if we look at the number of homes that were added to the market in July of 2009, we can see that's also down from last year. In fact, it's down 39.8%. That's 34 fewer homes added to the market in Morgan Hill in July of 2009 than were added in July of 2008. And that gave us a grand total of 53 homes listed. Now, the total number of homes sold, this is also heading in the right direction, straight up. Sales are actually up 67.86%. Now, that obviously sounds like a very impressive increase, and it is, given just what we've seen. We can see we're not at the highest level of sales that we've had going back to, say, 2005, 2004, 2003, but it's definitely headed in the right direction after we've had 3 years of steady decline from 2005 right on to 2008. We just had steady decline in those sales numbers. But what that gave us was 19 more homes sold in July of 2009 than July of 2008. So that's a really nice increase. It's helping to reduce this inventory. And they gave us a grand total of 47 homes sold in July of 2009. So that's really good news for folks in Morgan Hill. It's good news in that sellers are getting what they need and buyers are getting what they need. But prices are still excellent. We'll see that in a few minutes. Prices are still fantastic for buyers. But what we're seeing now is a situation where sellers are not just totally overwhelming the market. So we're heading really into a little bit more balance. Folks can buy a decent home at a decent price, and folks who want to sell those homes can get them sold. And that's really where we want to be as far as healthy markets are concerned. Now, as I usually like to do, I like to compare the total number of homes sold to the inventory, and that gives us sort of two ways of looking at the market. One is, how many months of inventory do we have on hand? And that stands at 4.34 in July of 2009. That means for about 4 1/3 months worth of inventory, so that if we started selling off the inventory right now with the same numbers freezing as they are now, It would take us a little over 4 months to get all those homes sold. Now, another way of looking at that number, if you're a seller, is to think of that as a competition number. How many homes are there on the market for every one that gets sold? So if this number is standing at a little bit over 4, that means there's a little bit more than 4 homes in competition with you for each buyer that comes out and buys a home. That number is in a much more healthy range. It's been a few years since we've had it down at this range. This was up in double digits for quite some time. Right around 4 is what I like to see. I don't really start panicking till it's over 5 as far as markets are concerned. And for those of you who've been watching these videos for a long time or listening to my podcast, you know that was really one of the turning points is when we crossed over that 5 number for this ratio and then headed right on higher than that. Now, last month's ratio was at 4.47, so we're heading in the right direction. And when we compare this to the county's actually been doing exceptionally well. The county is down to 3.01 for this number, so they've got about 3 months in the inventory of the county in general has about 3 months worth of inventory, or about 3 homes for every one that sells. Prices are still very good in a lot of areas, and Morgan Hill is definitely one of them. But as you can see from that number, we are not performing as well as the county in general. All right, now let's go ahead and take a look at these same numbers, but instead of looking at just the month of July going all the way back to 1999, we're going to look straight back just to February of 2008 and see if we can't figure out any trends that we might be able to project forward. Now, here we are in July. You can see the inventory numbers have headed just straight down. In fact, they're down 6.85% just from last month. So between June and July of 2009, we had a decrease in the inventory of 6.85%. That's 15 fewer homes on the market in July than in June. So that's excellent news. And it's been really, you can see that there's a little bit of fluctuation here and there. You can see, though, that this is definitely seasonally influenced, like I discussed a moment ago. In the wintertime, we tend to see the biggest dip in this number, and you can see that's exactly what happened. December was our lowest month, with steady ramping after that as we headed out of the winter months. And that's normally the way it goes. Now, what's interesting is, if we look back to July of last year, you can see that we got a little bit of a decline as we headed out of July, and that's usually the way it works. We usually see a peak in inventory right around the beginning to middle of the summer months. Last year we got it a little bit early. Our inventory peaked out around April, May, and then you usually see a decline right after July into August, September, and October. And we saw that last year a little bit with a blip in October as some of those final sales in September closed in October. But this year we saw much more dramatic decreases starting in February and heading right on through into the current month. So that's kind of interesting. We're not seeing last year we saw really the low point in February. Obviously before that it would have been lower because the winter months would have preceded February. But this year we saw our peak in inventory in February. So it was very early, and that's kind of interesting. Folks really jumped onto the getting their homes sold market early this year, and really we didn't see a huge jump in the number of folks who decided they were going to join in and try and sell their home in the typical period leading right up just to the early summer months. Now let's go ahead and take a look at the number of homes that were listed. We can see this is also down. It's down 5.36% from June to July, with 3 fewer homes listed. And the overall trend we can see is down. That's pretty clear from the averaging bar that I've inserted there, so that you can see what the overall average is for the year. Now let's go ahead and take a look at the number of homes that sold. We actually had a little bit of a decrease in sold homes. However, we are seeing a general increase overall over the year, as not only our year-to-year numbers show, but also when we look back over the year and try to normalize those numbers over the whole year, we can see that it's definitely on an upward trend. Sales are actually down 4.08%. That's 2 fewer homes sold in July than in June. If we look at July of last year, we can see it decreased from June as well. It's not horribly unusual, particularly since we're only talking about 2 homes difference here between June and July. My guess would be that we'll see relatively flat sales performance in the coming months. I don't think we're going to see a lot more ramping of the sales. But all in all, these are very healthy numbers for the city of Morgan Hill. So that's good news. Now let's go ahead and take a look at the short sale and foreclosure numbers. This is also some pretty good news. Let's take a look and see where we are right now. Now, conventional sales made up 57% of the total number of homes that sold. Short sales made up 17%, and foreclosures made up 26%. So if we look at last month's numbers, we can see that we've really started to shift these numbers a little bit. Now, foreclosures declined quite a bit as far as how many what percentage of the overall sales they accounted for. Conventional sales jumped to over the halfway point, so that's good news, and that's more on par with what we were seeing with the county in general. The county's actually doing a little better. They actually did a little worse in this particular number, but this is really good performance. It's good to see conventional sales taking up a little bit more of what's going on in Morgan Hill. And the reality is that you can still, even outside of the short sale and foreclosure market, you can negotiate some fantastic deals on conventional sales. And I think that some folks are finally realizing that. But I also think part of it is that we're finding that it's taking so long for short sales and foreclosures to happen. We're seeing overflow into the conventional market. So people come down to Morgan Hill because they're looking to take advantage of short sales and foreclosures. They find either that these homes aren't really what they want, or they're finding that it's taking too long to get responses from banks, or there's something else wrong with the property, and so they end up looking at properties that aren't short sales and foreclosures and end up just buying here outside of the short sale and foreclosure market. So I think that actually works out well. Now, to break these down into just the actual numbers, 8 homes were short sales, 12 homes were foreclosures, and 27 homes were conventional sales. So that's really all good news. Let's go ahead and move on now and take a look at home prices. Clearly one of the next most important things that buyers and sellers are interested in. Again, we've seen sales or prices decline for a while now, really since 2006 for the month of July, at really the same rate. In other words, that line that goes from 2006 to 2009 is relatively straight. It's a 16.8% decrease from 2008 to 2009 for the month of July. That's a $123,849 drop. The average home price was $613,400, and that's down really. So what we basically want to point out here is that the average home price since 2006, since its peak, has really come down just under $400,000 as far as average price is concerned. Now, I can remember when the average price in 2006, I don't think it was in July, but the average price we were seeing was just a little over $1 million. I think at one point we hit $1,050,000. And frankly, that was a pretty high average price for a city like Morgan Hill. And we've come down to the point now where affordability really isn't a question. There are properties that are affordable at that have great features at just about every price point. Now let's go ahead and take a look at what the median price was. The median price was $566,450. That was down 17% from the same time last year. That's a dollar change of $116,000. Now, if I'm smart enough to hit the button here, we can actually see what that is. And what does the median tell us? That basically tells us where a number of homes that sold were weighted as far as price points. So in other words, since the median is below the average, that tends to tell us that there were more homes sold below the average price than above the average price. Does that make sense? See, if you look back to, say, 2002, the median and average are exceptionally close. So that indicates that it was really a very true average. Half the homes that sold were above that price, and half the homes that sold were below that average price. Let's go ahead and cover some other interesting data for this month as far as home price goes. Now, the highest priced home is at 1610 Arguello Court. That sold for $1,140,000, and it listed originally for $1,275,000, and that was on the market for 74 days. That was actually a beautiful home. That was built in 2006. I can remember when those homes went in, and I saw this home actually when it was listed, and it really is beautiful. It has a lovely atrium in the middle with a sitting area and a little outdoor fireplace. Amazingly large lot. I believe it was over 18,000 square feet. Really a beautiful home, and that price is for what you were getting, that price is pretty amazing. Now, the lowest price home was the lowest price single family residential home was let me try this one more time, was at 17644 Crest Avenue, and that sold for $181,000. Original list price $169,900. And that was on the market for 395 days. Now, this is an interesting property. It sold in January of 2005 for $410,000. It went on the market in November of 2006 for $479,000. So it was actually on the market for a whole lot longer than 395 days. And the list price, the asking price, this would give you the impression that it sold for over ask price. It was a foreclosure property, but through some magic of relisting and delisting and all these other things that they do to properties, they managed to disconnect this listing from its original asking price of $479, even though it had pretty much been nonstop on the market since then. So this is just one of those circumstances where the numbers are going to misreport the reality of what's going on in the market here. But this is one of those properties, and I don't know how much detail folks really want me to get into on this, but one of the big reasons was really the obsolescence of this particular property. It only had one bathroom, and that's pretty common. For those of you who are interested in investing in properties, I don't think these one-bedroom homes or one-bathroom homes are a bad investment, but I think you need to go in thinking, when I buy this thing, the first thing I have to do is add a second bath. Once you do that, it completely changes the makeup. People don't even bother to look. I mean, when they're doing their search on the MLS, they're not even looking for homes. If they're looking for a 3-bedroom house, they're looking for 2 baths. So, just a side note for investors there. Now, average price per square foot was at $260.35 this month. Last month's was $269.87, so we're down a little bit from last month. Let's go ahead and take a look at the monthly numbers for home prices and see where we're going. Let's see. Now, this is going straight back to February of 2008. You can see it's just been a steady decline. We've got some seasonal ups and downs and bumps. The numbers are so small in the volume of homes that get sold in Morgan Hill that it's tough to really get a handle on this one as far as finding short-term trends, just as I said, because the volume of sales is so low. But I think we're definitely headed into the right direction as far as the rate of decrease. Are we going to continue to see home prices going down? I think there's a good probability of that. I think that a lot of the things that are going on in our local market, I think we're seeing a big delay in foreclosures that's going to come back to haunt us. We're seeing a much higher rate of redefault on mortgages that have been adjusted. So if you want to hear about this, if you want to get more information on this, let me suggest you listen to my podcast from there's actually several that I've done. If you just go through and look at the list and talk about foreclosures, I've been talking about this for a very long time. But our system is artificially delaying foreclosures, and I think ultimately that's going to be bad, and that it's going to push down market prices further when all those finally do come out. And it's going to happen. It's just a question of timing and whether or not it all happens at once or they just come spraying out at the end of the foreclosure hose at the same time. Now let's go ahead and take a look at days to sell. Now, as you can see, we're up to 125 days to get a home sold, and frankly, that's a fairly realistic number. I went back and reviewed these just to see if it was one or two homes that were really pushing things off the scale, and that really wasn't the case. Now, the days to sell is up 11.61%. That's 13 more days to get a home sold in July of 2009 than in July of 2008. The lowest days on market was 0. That basically means that someone sold a property before it was ever put onto the MLS. And you might ask, well, how does that happen? It's entirely possible that someone didn't decide to sell their property until someone came up with an offer that they liked. And that's how that worked out. Another way that can happen is sometimes offices will keep what's called a pocket listing, and that's when they don't put it on the MLS for whatever reason. The seller may request to not be on the MLS and just use the marketing skills of the real estate office that holds the listing to get it sold without using the multiple listing service. Frankly, I can't think of any good reasons to do that, but it often happens. And then after the fact, they will post that sale to the MLS so that we can include it in the data. Now, to cover sort of where we are here, the longest days on market was 607 days. The next lowest to that was 411 days. And frankly, those don't really stand out as way out there numbers. Now, obviously, the 600-plus days number stands out a bit. But the 411, well, we had 300 and something. We had several 300-day homes, the homes that listed and sold in 300 and something days. So these are all realistic numbers. And let's break it down for you. As I said, there was one property that sold in 0 days. There were 4 properties that sold in the first week, 9 properties that sold in 8 to 30 days, 6 properties that sold in 31 to 60 days, 9 properties that sold in 61 to 90 days, and 19 properties that sold in 90 to 180 plus days. 28% of the homes that sold in less than 30 days. So there's still some homes out there getting sold quickly, but there's an awful lot of properties out there that have been on the market for a really long time that sold this month. So that's frankly a real average number. I think if you're a seller trying to calibrate yourself to how long it's going to take you to get your home sold, I think 125 days is is the right number to plan on. Now let's go ahead and take a look at what this has done in past months. This is now not looking at just the month of July, but looking straight back to January. We can see a lot of fluctuation here. There's a little drop actually between June and July. It was down 8.76%, 12 fewer days to get a home sold. We peaked out in April, but again, that was one of those abnormal months where we had one or two that were out there. Same thing with March of 08. So nothing really to get concerned about here. It's relatively flat, really. I mean, I know it looks a little bit chaotic, but it's actually relatively flat, right around 125 days to get a home sold, which is where we were this month. 125 to 135 days, I think, is a realistic expectation in our current market. Now, keep in mind, I think that that's just going to get worse from here. If we look back to, say, September and October, where the days to sell decreased there, and then steadily started increasing after November, I think that this year we're going to see that be a little bit different. I think that in September in October, I think we'll see those numbers going up, and I think that they'll go up all through. And as far as reality is concerned, as far as just what the wait time for sellers, I think we'll see it going up as we head further into those winter months. All right, now let's go ahead and take a look at where these properties were located. It's interesting to see that you can see up by Anderson Lake. We actually got a home sold finally. That's the Holiday Lake Estates community, and that's a beautiful, a little bit more woodsy type of community. And then right across there, property number 25 is in Jackson Oaks. And Jackson Oaks is another one of those that feels a little bit more like a regular neighborhood, but just very mountainy. So there's a lot of, the roads are a little bit steep, but it's very paved and feels very much like a neighborhood. But a lot of beautiful homes up there, so it's nice to see that a little more activity going on up there. You can see the vast majority of the properties that are getting sold tend to be on the west side of the freeway. We see there's a lot of the older neighborhoods are located there, but of course also our highest priced home is also located over in that area. Or no, excuse me, it's not. I'm sorry. So anyway, the basic breakdown of the homes that are selling, tending to see most of them on the west side. And that's really all you can take from the map this month. Now let's go ahead and just review the ways you can get in contact with me. I won't read these all off to you today. Again, I've already done that at the beginning, but these are just for reference purposes. If you want to take a look, write anything down, get in contact with me, feel free to do so. I appreciate you taking the time to listen to what I have to say on these market analysis presentations, and I look forward to talking to you next time.